ETF, how to invest in exchange traded fund for beginners. In the next 5 minutes, I will show you, using simple words, how you can invest in hundreds of companies without spending much time on analysis, because it was already taken care of for you by professionals analysts whose day job is to do analysis. Also, you can invest any amount of money with usually no fees. As you probably already guessed it, yes, we will talk about ETFs. What is ETF? What type of ETF exists? Are they easy to sell? Do you get dividends? How price is determined? How it relates to your taxes? And in the end of this video, I will name 3 very promising ETFs you should seriously consider adding to your portfolio. If you do not know what an ETF is about, then you should definitely watch this video. You might be doing a lot of more work analysis than you need to. Or the opposite, you're taking too much risk investing in just few companies. If you have only $100 to invest and you want diversification with ETF, you have the green light. At the end of the day, it is important to understand that how much money you gain is as important as how much money you do not lose. So, what is an ETF and why it has become extremely popular in the last decade? Okay, let's start. For better understanding of what follows, you need to answer this question. If you have only $100 to invest, where would you go? What shares would you buy? To invest in any company, you need to take into account multiple parameters. That is why you need to do your own research for many companies before you can choose which one you think are the most interesting to invest in. At the same time, you know there are people who are doing this as a full-time job, analysts. Those are professionals who devote all their time to create a list of companies that are most likely good long-term investment opportunities. And this list is not a static one. It gets reviewed based on how well each company did during the previous year or so. There are several investment products that are built as a result of this: mutual funds, indexes, and ETFs. We are only going to cover the ETF in detail now. ETF stands for Exchange Traded Fund. ETF is a fund that holds many stocks or other companies or commodities in it. You can think of an ETF as a basket. Each egg here represents a company that the owner of this basket bought and put together. In this case, the well-known idiom "do not put all your eggs in one basket" means actually the opposite. We especially created this basket so you don't put all the money you have in one specific company. And this ETF is actually a registered investment company. So it will create its own shares, so you can trade it like any other stock. So by owning this stock, this ETF, you will receive an instant diversification because you own a small part of each of the companies. If you don't have any brokerage account yet, please check the description below where you can buy your stocks and ETFs. And using those links, you will have additional bonuses like free stocks or some amount of money in your country. Click that like button. And what about dividends? For those companies which pay dividends, you also get those dividends in proportion of your part. Now, let's see some statistics here. There are around 7,000 ETFs across the world with around $6 trillion in assets. And in the US alone, each year more than $25 trillion worth of ETF shares are exchanged. This is more than US GDP. Quick note, what is GDP? Gross Domestic Product, or GDP, which is a key indicator to show how well the economy did last year in comparison with previous years. Simply put, it is a total amount of all products and services sold in the US during a year. In other words, even simpler, everything that was sold, produced last year. BlackRock is the largest ETF manager worldwide, with around 30% of the market share. Vanguard and State Street are other leading ETF providers. The largest ETF in the US in 2016 was Spider S&P 500 ETF, managed by State Street, with assets around $220 billion. That's a lot of money in one fund. So this means people put a lot of trust in it for years. How ETF price is determined? Ideally, we expect an ETF to be the sum of its assets. Now imagine we have two people willing to buy my only existent ETF. They propose 1100, so I can sell my ETF share, which total value is 1000 for $1,100, so $100 more. And you can imagine that with an ETF having hundreds of assets in it, it can be tricky to know the total value of assets compared to the price of one ETF share. For this purpose, special institutions on the market exist to bring that price you pay for an ETF to match the ever-changing total value of all assets. I will not enter in more details here, but this question is important to clarify, I believe. Quick disclaimer, you need to understand that I'm not a financial advisor nor a CPA. I do not have any licenses. To elaborate the exact strategy, you need to see your professional accountant. This information here has general education purposes only. I'm not responsible for any decisions you will take. I'm only sharing my story. So, with that being said, let's continue with tax optimization practices. First, holding ETF in a taxable account typically generates smaller capital gains when compared to mutual funds, because ETFs do not necessarily have to sell the assets. Since ETFs are registered investment companies, they act as pass-through conduits, and shareholders are responsible for paying capital gain taxes. Basically, you need to pay your own taxes. This investment company, which means ETF, will not pay your taxes. Keep this in mind. Okay, so here's one of the strategies. First strategy. As you approach 1 year anniversary of your fund, you should consider selling those with losses before their first anniversary. Why would I sell with losses? This way, you can take advantage of the short-term capital loss gain. Oh, that's smart. So you're saying that this way I can buy it later, but by having loss I can report it on my tax return as a loss? But what if price goes up? Well, if you think that the price will go up, you can find an ETF with similar assets and you buy it so you don't lose the growth. Another strategy is the opposite. Consider holding those ETFs with gains for more than 12 months from the purchase date. This way, you can take advantage of the lower tax rates applied to long-term capital gains. Important note: ETFs that invest in currencies, metals, and futures do not follow the general tax rule, so please do your own research before any action you take. After all, you are the one responsible for your actions, and you will need to have a clear understanding of what taxes you should pay and when the tax event occurs. Don't forget to subscribe. Don't forget to subscribe. I have new videos coming up every week. To conclude, an ETF has almost the same advantages that a stock has. You can sell it anytime on an exchange. ETF provides a possibility to even buy a stock. Some stocks where a single share is worth more than you can invest. At the same time, it automatically brings you diversification, which decreases the risk of losing your precious savings. That is why the ETF has become so popular and its growth continues. It is time for promised bonus. Let's see 3 ETFs which worth to take a look at. QQQ, or Cubes, Invesco Cubes, previously known as PowerShares Cubes, is a widely held and traded ETF that tracks the Nasdaq 100 index. The Nasdaq 100 index is composed of 100 of the largest international and domestic companies, excluding financial companies that are listed on Nasdaq Stock Exchange. The SPY ETF is one of the most popular funds that aims to track the Standard & Poor's 500 index, which consists of 500 large and mid-cap US stocks. These stocks are selected by a committee based on the market size, liquidity, and industry. The S&P 500 serves as one of the main benchmark of the US equity market and indicates the financial health and stability of the economy. And finally, VTI ETF, the Vanguard Total Stock Market. The fund has returned 7.3% since its inception in 2001. This fund is the market capitalization weighted index that measures the entire investable US equity market. It includes small, mid, and large cap companies. The fund is managed in a passive manner and uses an index sampling strategy. And write me in the comments down below what is your favorite ETF if you have one already, or what is the kind of ETF you're looking for, Or do you have even any of ETF? Let's have discussion down here. And that's it for today. See my other videos and subscribe.